Keep talking some earnings here. George Tsilis is on the line with us to take a dive into HPE, Splunk, and a quick comment here on what we saw from CrowdStrike and others this afternoon. George, before we move on, give me your thoughts here on what we've seen so far. I mean, a lot of meets. You know, not a lot of huge beats for these companies, but meeting expectations, holding on to guidance. Do you think that's enough for these stocks that have seen valuations expand so rapidly since the lows a year ago?
I think so. I mean, if you want to talk about CrowdStrike, if that's what you're referring to, yeah, I think, you know, the valuation's relatively balanced, to be honest with you, OJ. I think if you consider just the numbers from this quarter, when you put it into context, I mean, 105% earnings growth, 35% sales growth, so you got 2.5 to 3 times earnings to sales. You look at the revenue, the guidance for Q4, it looks like it's pretty much in line for Q4 as well as fiscal year. The other thing I noticed is they did increase slightly by about, let's say, 13 or so cents at the midpoint, adjusted EPS for the full year as well as for next quarter by about 3 cents. But you're looking at a stock now that's slightly dipping in the after hours, and I think if you consider this quarter, I mean, it was obviously very robust. Forward estimates for earnings growth at around 55%, trading around 73 times forward earnings. So with that said, I mean, the multiple will go down slightly because the previous estimates at $2.83 now for fiscal 24 have been adjusted higher to about $2.95 on the low end. But one would say maybe that's still relatively, valuation rich, and maybe that's why we're seeing some jostling, if you will, or back and forth price action in the after hours for CrowdStrike, which has been a phenomenal performer over the last year. It may be just fully valued.
Okay. All right. So it's hanging in there for now. I do feel like this is the one that we need to test that, fully valued thesis. What is the market standard right now? So let's talk HPE there. And, CrowdStrike, also a company that's operating profitably, which of course sets it apart from some of its peers. That's important. Hewlett Packard Enterprise is seeing revenue growth of like 2 to 4%. So we're obviously in a different category here, George. Yeah. The stock's been soft last couple months relative to its peers. This is not unexpected, but it's also not terribly impressive still, the growth here.
Yeah, that's the story with HPE. I mean, this is a company that's participating obviously in these mega secular trends in data and cloud and connectivity for server storage and of course hybrid IT infrastructure. But it's not a growth story. And I think that's one of the reasons why. If you look year to date, it's down about 3% over the last year. It's flat. I mean, it's paying about a 3% dividend yield, so you are getting something by owning shares. But if you just look at the figures, I mean, they did come in ahead of expectations on earnings. 52 cents was the print. That was still down compared to 57 cents last year for the same quarter. Sales came in slightly below estimates, but again, this was down, I think, about 6.8%. And so you basically have earnings that are down, in the low double digits percent-wise, revenue, which is somewhere in the mid to high single digits in declines. But you're not seeing a stock that's really reflecting, really bad revenue and earnings growth because this company is just not growing very much, but it's also not, poorly valued. And I think that's one of the reasons why I look at the reaction in the after hours. There's nothing going on with it just because the expectations were already very low from a standpoint of sales. Midpoint at 2.5. They came in between 2 and 4. So, one would say perhaps they slightly increased it to maybe 3% at the midpoint. But nonetheless, earnings growth estimates somewhere in the low single-digit range, about 3%. So you're just not getting growth with this name. And I think that's one of the reflections that you can take from it. They are profitable. I mean, at the end of the day, you take about $29.5 billion in sales. Last year they earned about $1.03 billion. So their net income is, 3.3%. They're just not growing. And I think that's, again, indicative of how the stock is just sort of drifting, obviously in a volatile capacity over time because of market conditions, but it's done nothing in the last year.
Okay. Interesting. Doing nothing is not going to cut it in this category, right, where growth is in demand. George, let's talk Splunk for a sec. This is a good deal for Cisco to pick this company up. Is it looking strong and healthy?
Well, I mean, yeah, there's some, I guess, goods and bads, I suppose, or pros and cons to it. I think at the end of the day, just looking at it from the standpoint of earnings, yeah, I mean, they're coming at it and denoting that they're not going to have a conference call because of the pending acquisition, but they are generating higher sales growth year over year. 55 cents was the number versus 20 cents last year, so that's a complete flip, and 15% sales growth for the name. I think at the end of the day, cloud application software, machine learning, IT management, system security, everything that's integrated in terms of data management that Splunk does, I'm not surprised to see it is acquired. Other companies in the same sort of ecosystem or space would include Datadog, MongoDB. Now the question is did Cisco overpay? Two, can they afford it? And why is the stock 3, trading below the advertised or the acquisition price of $157 or $28 billion? And I think maybe it was a little bit of a stretch for Cisco. They've got about $24 billion in cash on their books, so they're going to use all their cash. They're obviously going to have to raise some equity or in lieu of that, some debt to continue to finance the completion of the deal. Maybe that's why, the stock is not trading close to that 157. And again, things can change. I mean, the acquisition was announced back in September, I think September 21st, not too long ago, and I think the market's still trying to digest it. So at the end of the day, is it going to be accretive to Cisco? I think so. Obviously, it was more accretive to the Splunk shareholders because it's a growth story, but you basically have a company, Cisco, paying out all of its cash, if you will, having to finance the rest of the deal. And again, are they going to find synergies? Most likely, but it's probably going to take some time for that to happen.
All right. Good stuff. Sounds like it's definitely going to be a story for next year for these companies.